Got some spare cash to spend? Want to throw into the stock market and make millions? Well, guess what? You can. Of course, over a lifetime of investing, it's possible. Everybody wants to get rich quick, find an easy shortcut and make a quick buck. 9 out of 10 times, these get rich quick schemes end up being a pyramid scheme, and you lose out on your hard-earned cash. Now you say, why me? It's because you didn't do your due diligence and background research before investing. To become a successful investor like the great Warren Buffett and Ray Dalio, you need to be disciplined and willing to put in the hard work and hours to see fruitful results. Nothing ever happens overnight, unless you win the lotto. Now that you're ready to put your money where your mouth is, but you don't know what to invest in, stocks, bonds, real estate, the list goes on. Well, I have an all seasons weather portfolio for you, even though if the stock market crashes, you'll be fine. And if you're not investment savvy, not a problem. This is what the majority of people should be investing in. Right, first you need to understand what portfolio will suit you and your risk tolerance. Risk tolerance is the level of risk that you are prepared to accept in pursuit of its objectives, e.g. your investments. Another aspect of these portfolios is buying and holding for a long period of time to see maximum results. This is extremely important as long-term investing is safer and allows you enough time for your investment to grow. As a rule of thumb, you should buy and hold up to 5 years until you think about selling it. Short-term investing never works out unless you're doing day trading, which is far more riskier. This will lead you to panic selling when you see your investment goes through its ups and downs, as all stocks do. What goes up will come down, and what goes down will come up. I'll explain how to invest depending on your age group. If you are aged 18 to 30, you can invest in more volatile investments such as individual stock holdings. This is because time is on your side. You have the time to recover your losses. This means that you could take more risk on volatile investments, knowing that the market has plenty of time to correct before you retire. Your portfolio should be stock heavy to see the maximum yield. An example of this is of your portfolio can be 80% in stocks and 20% in bonds. Investors that are aged 30 to 40 should adjust their portfolio to a safer and more balanced approach. An example of this is 60% in stocks, 30% in bonds and 10% in precious metals. Stocks are 3 times more volatile compared to bonds, making it a riskier investment. But you have better chances of growing your investment, usually 8 to 11% annually. Remember to always do your research so you understand what you are investing in. As Warren Buffett says, don't invest in what you don't understand. And as a reminder, it's never high risk, high reward. It's always a calculated investment. You should only be taking on the minimal risk and maximizing your rewards. I'll explain in a bit how we can make your stock portfolio even safer, so don't worry. Those in their 40s and early 50s are established in their careers and have more money to put in their asset allocation strategies than their young adult counterparts. They have an eye for retirement, more conservative with their money, as they have the responsibilities such as a family to feed, a mortgage to pay off, and much more. Your portfolio is adjusted to minimize your risk, as the investment doesn't have time to recover if any losses occur. An example of this conservative portfolio is 60% in bonds, 20% in stocks, 10% in precious metals, and 10% in cash investments. This portfolio minimizes the risk involved and allows you to be invested with any spare cash that you have. I will now tell you an all-season investment portfolio. No matter what happens, you will be okay. This is Ray Dalio. Ray Dalio is the founder, co-chief investment officer and co-chairman of Bridgewater Associates, which is a global macro investment firm and is the world's largest hedge fund. He is the author of the New York's best-selling principle, Life and Work. He is known to have a very practical understanding of economics that is very different from conventional economics thinking. He spells out in his video series how the economical machine works. And what he has found out that these holdings, which is 30% in US stock market, 40% in long-term treasuries, 15% in intermediate term treasuries, 7.5% in commodities and 7.5% in gold, will allow you to have this report, so no matter what happens during any economical season, you'll be okay and you will see gains in your portfolio. Your portfolio can be flexible in what you are comfortable in, such as precious metals, real estate, cryptocurrency. It just depends on what you understand and your risk tolerance. So don't let these guides limit on what you want to invest in, because they are always flexible and always tailored towards yourself. But as a good starting point, this is a good portfolio to follow if you're new to investing. In an upcoming video, I'll be discussing what ETF and index funds are and how it can make your stock investments safer. In short, they are a collection of stocks and bonds bundled together which you can buy. This means you are more diverse, and if anything happens in a particular industry or sector, you're safe and your money is spread across different areas. An example of this is the S&P 500 and the FTSE 100, which are the top 500 and 100 companies in the United States and the UK, and you own a little of all of them. Isn't this amazing, being an investor in the top companies in the US and the UK while being diverse and minimizing risk? Sounds like a good thing to me. So, purchasing index funds and ETFs are your best options when purchasing your stocks and bonds. Now you know what to invest in, start investing. If you found this video helpful in any way, shape or form, please consider helping out the channel by dropping a like, comment and subscribe. It's free and it takes out a moment of your day. If you want to get started, you can use my Trading 212 link and you'll get free stocks worth up to £100, so you don't even lose out on anything. Thank you very much for clicking on this video and listening. This has been The Art of Finance. Peace.